Hi class, we are Group 9 presenting our final presentation on Goldman Sachs. My name is Priya Ravi and my fellow group members are Simone Tadeo, Parth Dudeja, and Kehinde Adevuyi. Most financial professionals have heard of Goldman Sachs, as it is one of the top 25 investment banking companies in the world. This group project gave us the opportunity to learn about this prestigious multinational company and dig deep into their financials, business strategy, values, and to evaluate its competitive positioning. Without further delay, let's begin. Founded in 1869 by a German immigrant, Marcus Goldman, Goldman Sachs is a large investment bank that is headquartered in New York City, New York. Merchants in Lower Manhattan struggled financially during the late 1800s due to a period of tight bank credit. So Marcus Goldman provided an alternative by purchasing promissory notes of their customers to sell the notes to New York's commercial banks. His son, Henry Goldman, and son-in-law, Samuel Sachs, introduced the company to New York Stock Exchange in 1896, making the company one of a kind for large sales of commercial paper. The company grew rapidly, even as it passed through difficult financial regulations, the Great Depression, and World War II, proving its ability to continue its operations and stay afloat in the harshest economic environment. By their 75th anniversary, Goldman Sachs led syndicates that underwrote over $1.5 billion in new securities. Today, Goldman Sachs has turned service-oriented and focused their business efforts in investment banking. According to their most recent financial reports from the Securities and Exchange Commission, they operate in 5 business segments: investment banking, institutional client services, investing and lending, and investment management. The company's core values, unwavering commitment, excellence in clientele service, integrity, professionalism, and upholding business principles and practices to the highest standards, transparency, and extremely aggressive competitiveness within the industry contributed to their success and reputation within the industry. As mentioned in the overview, Marcus Goldman used the hardships of a period of tight credit during the post-war era to start a revolutionary commercial paper business in a small office in Lower Manhattan. Today, this multinational company operates in several parts of the world, including but not limited to America, Europe, Middle East, Africa, and Asia. The impact of the 2007-2008 financial crisis had a significant impact on Goldman Sachs and is worth noting in its history. The housing crash, for which this bank had underwritten several issues, and the default of several commercial banks had a major impact on its business. It had layoffs, reorganizations, and changes in strategy and standards. At its best, Goldman Sachs is known as the most prestigious and distinguished company since its founding. The company had gone through significant mergers and acquisitions over the last few years. They include the acquisition of J. Aron and Company in 1981, Hull Trading Company for $531 million, Spare Leeds and Kellogg for $6.3 billion, and J.B. Were for $1 billion. Goldman Sachs' business strategy can be effectively analyzed using the SWOT analysis: strengths, weakness, opportunities, and threats. Firstly, Goldman Sachs has several strengths, such as a wide geographical presence, peak and maximum operating performance, strong brand recognition of the company, and its involvement in investment banking. This company may use its strengths to take advantage of opportunities such as increase in demand for wealth management, not just in the United States, but also across the world. The trend of increased demand had been consistent over the past few years. Furthermore, tapping into emerging markets will not only be beneficial for Goldman Sachs due to the increase in business and access to various resources, but the presence of this company in emerging markets will improve the conditions in those countries economically. In addition, an important growth opportunity lies in asset management and security services. While this company's major section is not in security services, the demand for this in the economy is promising. On the other hand, Goldman Sachs has its weaknesses. Firstly, this company operates in an extremely competitive, cutthroat environment. Entry into the industry has been becoming less difficult over time, so the threat of competitors is high. To stay competitive, Goldman Sachs employees work long, intense hours to close landmark deals on important underwritings daily. Also, the company's financials and net interest income have been going through degradation on a downward decline over the past 5 years. Weak financials put the company in an inconvenient position in the long run. Due to this, the threats include low interest rate environments, which is bad for banks, and constant regulatory changes in requirements.
Let's start with the analysis of the financial statements reported to the Securities and Exchange Commission by Goldman Sachs. First of all, we can notice how the revenues in the income statement fluctuated over the years, reaching a peak in 2017 of 32,073 million. Their primary sources of revenues are investment banking, investment management, market making, and commission and fees. In those, it can be observed that investment banking and market making play a major role in generating revenues. As you can see in the graph on the left, investment banking generated almost 7,371 million and market making generated almost 7,660 million in 2017. This pattern was the same in the previous fiscal years 2016 and 2015. From the operating expenses point of view, it is clear to see how expenses decreases from 2015 and 2016 and then remain stable in 2017, around 11,800 million of dollars. Based on this, Goldman Sachs is increasing their net income by diminishing operating expenses rather than by increasing revenues. Specifically, the brokerage, clearing, exchange and distribution fees is the largest account with operating expenses, consistently going over 2.5 million. Lastly, net income decreases over time significantly, mainly from 2016. This shows that Goldman Sachs reported a weak income statement in their most recent reports. The balance sheet contains information about Goldman Sachs' assets, liabilities, and stockholders' equity. The trend for assets show an increase over time, especially for receivables, financial instruments owned, and collateralized agreements. Assets during the fiscal year of 2017 increased by almost 6.5%. The only accounts that decreased were cash and cash equivalents. This indicates that this company is becoming less liquid in terms of cash and focusing on investing in longer-term assets, mostly financial instruments. Next, analyzing the liabilities point of view, we can say that the liabilities went up by around 8%. Looking deeper, the payables went up around 18% from 71,816 in 2016 to 84,718 million in 2017. Therefore, liabilities went up at a higher rate than assets. Lastly, shareholders' equity decreased by 5% over the years, almost by 4 million. The balance sheet is a good tool for investors to assess and determine the financial health of the company, and it also helps people to understand how the company is implementing its goal strategies. Finally, the statement of stockholders' equity reveals the important information about shareholders, common stock, and dividends. Over the recent years, retained earnings increased from 2015 to 2017, but net income decreased by almost 42%. Preferred stock, which gives the precedence over the owners of ordinary shares in the payment of dividends and in the distribution of the assets of a company when it goes bankrupt, increased steadily during the period analyzed, reaching a peak of 11,000 to 103 millions of dollars. Additionally, paid capital increased gradually. Shareholders is important for those people who invested in the company. Indeed, it represents the part of ownership in investment terms of an individual in a company.
Additional financial information is beneficial in assessing Goldman Sachs' performance in the industry compared to its competitors. As you may see in these graphs, Goldman Sachs' performance has been consistently below the industry average. Based on the most recent financial statements submitted to Securities and Exchange Commission, return on sales, which is also known as net profit margin, is 11.49% for 2017, whereas the industry average is 21.46% in orange. ROS can be calculated by dividing profit by total sales. The industry's outperformance can also be seen for return on assets and return on equity, which can be calculated by dividing net income by assets for ROA and net income by stakeholders' equity for ROE. ROA is 0.40% for Goldman Sachs, while the industry average is 0.79%. For ROE, it is also similar in a sense that it's 5.05% for Goldman Sachs, but the industry average is a high 11.35%. Only in asset turnover is where the performance matches. It is not a good sign for Goldman Sachs to have a 13.2 financial leverage ratio. It is considered very high, especially when the industry's numbers are lower. Overall, the company's core financials are not performing well. Surprisingly enough, the stock has been performing decently well over the past 5 years. As you can see on the chart on the screen, the stock's performance is not an exponential growth, but rather a consistent leveling off. In terms of investment perspective, the financials and stock performance are not appealing. However, Goldman Sachs does have a market capitalization of $93.17 billion, which is extremely large. Also, their PE ratio, which is the price to earnings ratio, is 27.93, while the industry's PE ratio is 25.19. This additional information, not found on the company's financial statements, are very important in valuing Goldman Sachs because they speak volumes on the company's financial health.
Goldman Sachs, being a large multinational company, is not only diverse in employment but also in partnership with customers and competitors. The company's customers include high net worth individuals, hedge funds companies, commodity and currency-based companies, credit funds, and real estate. Competitors are also large institutions such as Morgan Stanley, TD Ameritrade Holding Corporation, Standard and Poor, and also Charles Schwab Corporation. Staying competitive is so important to Goldman Sachs because the industry in general is intensely competitive, and those competitors are diverse. JP Morgan Chase is now operating in the same business area as Goldman Sachs and Standard and Poor, but there is a overlap, causing the distinct businesses to be considered separate. Their clienteles are served with highest quality, so customer retention is high for Goldman Sachs. Since the employees are higher based on knowledge, skills, and high ability to learn, employees are able to cater to different type of customers.
In April 2017, Goldman showed lowest trading results for first quarter of 2017. Bonds, currencies and commodities boomed for the first quarter of 2017. Bank of America and Citigroup showed